Hey everyone, this is Michael Bengiat. This is the Stock Picks weekend video for May 14th, 2022. So today we're going to go just quickly through the market environment and stocks on I think we only have stocks on our watch list at this point. And then we're going to go through some past trades and talk about where we bought and sold and why. Before we start though, here's our disclaimer. Please pause the video and take a look at this so you understand what we're seeing here. And so let's go ahead and just start. The market has just been in a very strong downtrend. There's almost no stocks ready to buy. We're in the middle of looks like a pretty strong relief rally, but we're getting the biggest moves in the most beaten down stocks. I mean, I've been sort of screenshotting some of these declines, and we had 3-4 days in a row of just 20% or more declines in some stocks, and then of course on Friday, yesterday, some of them went up over over 20% again. So it's just a lot of bottom fishing going on right now. These stocks, if we've talked about, here's example is just our ARK fund. I keep bringing this one up, but we talked about the different stages of the market, and this is definitely a stage 4 downtrend. But you can see here, look at the bottom fishing. It closed up here, and we even went all the way down here during the week. So that's just bottom fishers piling in. But this is a stage 4 downtrend. But this represents many of those stocks that are the disruptors that have been so popular in genomics and automation, robotics, healthcare. Looking back, it was just a massive bubble, probably fueled by too much liquidity and good stories. But ultimately, those valuations were just completely off the rails, and we're resetting them all. But just looking at this ARK fund, it's basically wiped out almost the complete move up from the coronavirus bottom. So this is something we don't trade these kinds of stocks when they're in downtrends. You should not have been any of these that she owns, at least anytime over here. Maybe on this part we own some of these stocks, but it's again, the big lesson is she doesn't have any risk control, and it's been sitting with positions that are, some of them are down 90% or more, and she buys more and more of them. So that's just somehow people keep adding money to her fund. So I don't really understand that. I think the true bottom is going to come when that doesn't happen anymore. And I even saw that on Thursday and Friday. We're getting the meme stocks were back in vogue again, and I think GameStop was halted again for just volatility and moves. So that has to all go away at a true bottom. So I have a feeling we're not in the true bottom anywhere near it at this point, but we'll see. We're in a correction still, and there's really still almost nothing setting up. So as I mentioned, and so at this point, we stay aside. You should be in cash and just doing some. It's really good to go back and look at some of your trades. So we're just going to do that today. There really isn't much to go through on our chart, so I'm just going to make this one a little shorter. So I'm going to go through some of our better trades that we had. So this was Palantir Technologies. The only thing I don't have here is where these stocks have gone since we bought and sold them. Maybe I'll bring it up at the end. So here we bought this. We had a nice little IPO base that formed. And you can see here, it came down, sort of tried to break out, and went to a little tight configuration, which we'd love to see. It actually formed another little cup with handle. This is a weekly chart, so it's kind of a little harder to see. No, sorry, this is a daily chart. It's just that we had such a big move. This was a 400% move that it's gotten all compressed. But we end up buying right there on this IPO breakout, and on this green arrow. So you can see all the places that we end up selling. Now, at this point, I was thinking, well, we're actually in a bubble, and you don't know how far these are going to go, but you also know that you need to take some profits quickly because they all turn into, eventually they'll collapse. And so looking back, I was probably a little quick to sell some of these. So I sold a little here when it just made, it was like a 50% move. So I thought, you know what, in a couple days, 50%. I mean, back then it was like, oh, that's nothing. Everything's going up that much. But, just being a more experienced trader, you're like, you know what, you got to take some off the table. So we sold a little here. It formed a little consolidation. It broke out of that. It was getting a little more extended because now we're up like 70%. I sold a little bit more there. And then we had a sort of a final blow off. You can see that went up 161% from the base breakout over here. So we sold into that. I think I got right around where the arrow's pointing. So, but I still had a little bit left, and I thought, you know what, you just never know. I didn't sell it all, and I kept one final bit of it. I ended up selling that. It's off the chart here. It was in the low 20s. It just, the stock though recently just went to like $5, so it broke below the whole thing. So, anyways, that was that. I kept a little bit of my original buy here because I thought, well, it's unlikely, unless we have a market crash, which of course we have, it'll ever come back to here, which it did. So, there you go. But I was out of that, long before then. So then, anyways, I thought, it started, consolidating, and it formed a little pattern here. I thought, well, let me get back in, because this thing it came down really sharply, which I expected, but it seemed like it was forming another, base here. So we ended up buying right here on this little breakout of this little consolidation, but ended up selling the whole thing just a few days later when it broke below the consolidation. So that was I think we lost $100 or something like that. It was, minor. So of course it came down even farther, which was fine. And then we formed this little tight pattern, and I don't remember what happened. Maybe I saw some news or something, but anyways, we bought back a third position over here, and we ended up selling, I think here. I don't know if we had, maybe I'm missing an arrow. If not, I think I might have sold some of it here. Again, this was another big move. I was like, okay, we seem to be getting a little in high volume too. If not, we sold here, and then that was it. I kept that final little bit of position from here, and it was sold much later when the market just finally just fell apart. But all in all, we had a 131.77% average gain. It was a nice trade. It's one of the better trades we've had, and nicely coming out of an IPO base. But this is, when you're in a bubble, you never know what's going to happen. We can look at some of these charts of, they all looked good. Look at, Atlassian or the Trade Desk, or, I can give you the Coupa software. There's dozens of them. HubSpot, at one point these were $600-700 stocks, and now they're 300. In some cases, we're down 90% in some of the stocks. So let's take a look at another one. This was a Big Commerce. This was another one that it formed an IPO base, but it just came ripping straight up to then. And we normally don't like buying these kind of just coming flying up off the bottom. But again, it was a bubble environment. So normally if it does come right back up to its old high, you want to see it kind of just stay there a little bit, maybe dip down and shake out weak holders. But it was just a crazy period. So we end up just buying. I thought, if it breaks above this old high here, I'm going to buy it. So I think we bought it at 104 or something like that. And I think in the same day we sold some here 140 and 150 something. Because this was a 50% move, 56% move in just 2 days. Now again, young traders that's all they were seeing. They were coming in the market and going, "Oh, this is great! This is so easy. You can just make money. Like, I just have to buy anything and it all goes up." So, anyways, we sold some there, and then when this kind of happened, we thought this, bad close on a thing. It looked like that might have been the top, which it was, and we sold a little bit more on this down day here, and we're out of the trade. Now, Big Commerce, I think this is, I'll show you at the end. I'll bring the charts up, but this was, I think, went down to 20 or something like that. So really, that was just you have to sell these things. They're just, especially in this crazy environments, you can't sit around. Some of these kids that were buying GameStop and they sat through the whole thing. I think it was more because they didn't have any sense of what could happen. And some became millionaires. I'm sure some of them lost all those millions and worse. So, okay, so let's look at another one. This was Dada Nexus. This one, I think, basically, because it was a Chinese stock, really imploded badly after this. So this was kind of a sloppy base, but it did kind of tighten up here. And I don't remember, maybe there was some news or something, but I ended up buying here, breaking above this here. It was a decent sized base. The fact that it broke out and couldn't get above here, a little bit of a warning sign, but again, this was kind of a crazy period. Looks like we bought right, I have a little note here, we bought right here, a little lower than the arrow, and it just came screaming out of the market. Also, I think looking here, the market was already starting to go up quite a bit. So it could have been that just the bubble was just inflating. So let's just get in. Bought this, sold a little bit, looks like the same day. And then I think I exited over the next few days when, the move was just, this was it was about 30 over here. Looks like it went up to 61, 100% move. Yeah, so anyways, sold most of it here in bits. Again, that's one of the smart things you can do when it gets crazy is you just don't sell it all at once. I mean, maybe if this was 30 and you were in GameStop or something, and suddenly the next day it's 200, you probably should sell 90% of it. So, anyways, I exited little bits and pieces of it, held some of it just in case, and then it finally broke below, and we were out somewhere over here. Just broke below the whole base, and that was it. And these charts are going back, some time, so that one just collapsed also. So I want to do one more here. This was in our long-term outperformer portfolio, and this was Epam Systems. It was one of the great long-term leaders. I mean, this just kept going up for year after year after year, and you can see it became a $700 stock, and it started off, I think, at 20 or something. So these, of course, today have become few and far between because most of them have just completely imploded. So that's why we've had very few stocks on there, but they'll come back. There'll be a new crop of leaders like this that you've probably never heard of. So here we had a base that came, we ended up buying the breakout of the base. It came up, at this point we were already getting a little into more of the craziness, was maybe over of the bubble. So I sold a little bit here when it kind of started to act a little out of character. You can see here, it mostly is a nice trader. And then here we had a big drop, closed back up, and we had a second drop, closed back up. I decided to take some off the table here. And then finally, I exited over here. Now this is, and again, this is what will happen, of course. We sold and it kept going higher. And then, of course, you think, well, did I sell it well? It went higher afterwards, which is, almost always will happen. Then it had a correction, and then it went screaming higher even more. So I think I sold it at under 600, and now it was over 700. So you think, I made a big mistake. But the whole key is you're not trying to buy lows, and you're not trying to sell the top. You'll never do it. You can't do it. Nobody can. You just want to take a piece of the middle out. You buy when it's in a nice uptrend. It's somewhere where it looks like you can get in low risk, like coming out of a base or maybe off of a moving average. And then you get out when you start getting sell signals. So this was, all in all, it was a great trade. So I actually have a little note here. It looks like from a previous thing. You can see here that we started to break out of this base, which was a later stage base. We started getting some lower volume, especially when we had this final breakout. You can see there was really no volume confirmation. And so that was one of the reasons we got out. So, but looking back, I'll show you again in a chart, but the main reason we got out here was this kind of lesser known rule is that what we've done here, we've put in a line showing the upper part of a channel. Now, or the upper part of a trend line. So you can sometimes do it as a channel. If you can see like it's kind of been floating between a range. But over here, this is going back to June of 2019. And you can see that the price would just come up and it would just kind of hit that. It got to get, at that point, it's a little extended. We have sometimes a bigger correction, sometimes a smaller one. We would come up, hug it again, pull back, come up, hug it again. And then finally, and this is going over a couple years. So you want to make sure that you have a number of points where these trend lines are touching. So we had over here, 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 and then we had over here, and then we finally broke above it. That is a sell signal. So that's why we sold it. Now, of course, it may just because we were in a bubble, it just came down and it broke out even higher. one more time, got even more extended above that line, and then that couldn't do it. We broke hard, came back up there again, and then the sellers just pushed it down. But you can see this was a $700 stock, and it went down to 160. So that you can see it broke the whole thing is over. This stock's run is over. This is that stage 4 decline. That's it. So EPAM is probably done for the time being. It could recover depending. It's been just a steady grower, steady sales, steady earnings. You can just see here, $2 to $3, $4, $5, $6, $9. Next year looks like it's close to 13. Great return on equity. EPS growth rate 25%. It's doing what it needs to do, but the valuation probably was just really, really high. We still have a PE of 30. We don't really look at PEs, but probably up here, the PE was over 100 or something. And these companies are all really getting beaten up now. So the whole lesson here is that you have to take profits when you have them, at least part of it. Now, if this final thing about EPAM, if this stock hadn't already made a huge run, then we might be thinking, well, okay, well let's just hang on to it. Maybe I'll just sell a little here, but I'll keep going. But when a stock has already made a big run and then breaks above a long-term trend line, that's a longer-term sell, and that's where you should be getting out. So let me do this. I'm going to bring up the other charts. We'll just take a look at where all these other stocks are. So 1 second. Okay, so here's Palantir. This is where we were buying it, right here in this first IPO base. This is the big run that we sold into. I don't remember offhand now what we did, but anyways, it had one final blast off. I think we did. Oh yeah, we did get back in, and we sold into this. We had one trade in the middle here that we didn't work out. Got out with a small loss. We sold into this final one, and then here you can see we actually went down to as low as $6.44 this week, and currently at $8.34. So anyway, you can see it just come in a gap down. So this is just broken. This is that stage 4. Here's stage 1. Stage 1 was just this kind of, because an IPO didn't have much of one. Stage 2 was this big run. Stage 3 was this kind of topping thing here, and then stage 4 is definitely broken. So this is why you have to have sell rules. And here's the next one, big commerce. This was it was even worse. Here's the IPO base. We sold all of it into this 56% run. And, the stock on sometime this week was at 12. Look how far it's come. It was as low as 12.71. Bottom fixtures have piled in and it's closed at 17. That's already a 20% move. Next one, Dada. Here we go. We were buying it in this over here. We took our profits up in here. I think I held some of it, was out somewhere in the, I don't remember, somewhere here. I might have just said, we'll keep it. I think we ended up breaking even on that final bit. And it collapsed all the way down, all-time new lows at 5.31 this week. And then finally, we have EPAM. And this one, we saw, it was already on another chart. Look at this collapse in this 1 week, down almost 50% in 1 week. I mean, that's stage 4 classic. Just look at the moving averages curling over. And then we bottomed out at 168. But look at this is what makes it scary about these declines, because at 168, and look how far, just a week later, it went as high as 300. And then we're making new highs here. So anyways, anything can happen, but you can't sit through this, because like we've seen, this could, and we don't know what's in the future. This could be a $60 stock, $80 stock, if it really gets much worse. So anyways, that's it for this week. We do have eventually, it's been slow going, a course on, a video course on buying and selling rules and money management. So the first one we're going to come out with is the selling rules. So that we'll keep you posted on that. But that's about it. The lesson is you have to have a buying criteria, when you're going to buy, and you have to have selling criteria when you're going to sell. And the big lesson is you're never going to get the top, you're never going to get the bottom, but you're just trying to take out a piece of the middle. And that's how you can do extremely well in the stock market. Always looking at it from a risk point of view first. Is the upside, if it's good, will take care of itself. You have to protect the downside to protect your capital. Okay, and we'll be back next week. Okay, thanks.